about Mehta Equities? Well, technical analysts are Hello and welcome. You are watching Business Today Television. This is Market Today and I'm Sakshi Batra. It was indeed difficult for every Indian and cricket enthusiast to gather fresh spirits to wake up to a new dawn today after the unfortunate loss at the World Cup finals yesterday. But as they say, the show must go on, and therefore I wear blue as a mark of solidarity with Team India today as we begin a new session of trade. The Nifty 50, remember, ended on a lower note on Friday, but definitely had the best week in 2 months. From October 27 lows, which is the start of the November series as well, the index has now gained about 800 points. The rally of the truncated Diwali week had left investors richer by 7 lakh crore rupees. The big question is, will this momentum continue into the new week of trade as well? We will find out all of it, but first up, the top headlines I'm tracking for you this hour. Indian stocks are likely to regain momentum on Monday as traders punt on the long side in frontline Nifty shares and also beaten down financial sector. Banks and NBFCs will be in focus. Tata Motors will be in thick of action this week as its subsidiary Tata Technologies floats an IPO. Others in the fray are RREDA, Fed Bank Financial Services and Gandhar Oil Refinery. Very good morning to all our viewers joining us this morning. We have a special guest joining as well. So let's welcome Devin Choksi, MD of DR Choksi Finserv Private Limited. Welcome, sir, and thank you so much for taking the time out. Well, of course, it was a difficult weekend to, gather spirits from and start a new week. How did you really, look at the, loss that India had yesterday at the World Cup finals? And, Indian markets, will they continue to, regain momentum despite the loss that we had on the cricket field?
Yeah, good morning, Sakshi. Well, I think when you win 10 games out of 11, I think you don't regret. Frankly speaking, I think that's a strike rate that one should be enjoying in life. Because if by law of probability also, I think you had to lose one of the match. And probably I think you lost, I think, one match and I think you won balance 91%. So frankly speaking, I think nothing has changed overnight. Maybe I think the World Cup, which otherwise would have come to India, maybe probably has gone to a team which has played on that day relatively better compared to Indian team. So we should give full credit to the opponent. Maybe I think India would get a chance again to prove themselves. I think the life goes on. One should not be, I think, getting too emotional about every aspect of the results that you get from this. The process is more important. The journey is more important. The result is not always very important.
Rightly said, sir. So let's talk about the Nifty now and your own sense about the markets going forward from here. We've already seen 3 straight weekly gains that have put Nifty now just about 250 points within the 20,000 mark as well. However, we've also seen that 19,800 mark continues to remain as a barrier or a key resistance level as well. For the second day in a row, we did see that the Nifty did cross that on an intraday level but failed to sustain above the same. Your own sense of how the markets will move from now on, the key triggers that the markets may have to react on now?
In a normal situation, probably the market would have moved about 19,800, which in my viewpoint, I think might take a breather or a stop for the time being because of the banking regulations which came in the last week. Wherein I think the amount of new money which would be required by the banks to manage this particular margin would be somewhere around 80,000 crore plus. Given that situation, the market participants are unlikely to put heavy weight on the bank. And bank otherwise, I think, holds the weight of around 40% on Nifty. So certainly, I think a new buying is not happening in bank. That is understood. On the contrary, the shorts which are already there in the other areas like Reliance and NBFCs of the of the market probably would shift more towards the banking stock, and as a result of which, I think you might see a kind of a separation in the on the indices front. But however, some of the other stocks, I think, which are looking prominent and which are looking good from investment point of view as well, they might possibly find the buyers and long position getting created, and that might include the names like Reliance, that might include some of the commodity names because of the lower crude oil prices. That might also include, I think, some of the FMCG names because people would like to balance the portfolio from banking to the other stocks. So certainly, I think the index may not go down as much, but at the same time, had it probably in a normal situation, it would have crossed over 19,800, which might take little longer time at this point of time. But individual stocks are likely to perform better, and that is what one should be reading on. I think select individual stocks which are looking relatively better as far as their prospects are concerned.
Rightly pointed out by you, sir. In fact, for all the viewers who have not yet caught up on the news, the RBI's announcement of asking banks and NBFCs to set aside more capital to back the unsecured loans like personal and credit card loans weighed on nearly all the banking and financial stocks on Friday. We did see Nifty Bank underperforming on the final day, trading day of the week. It fell back below the 44,000 mark. It also posted a loss for the week, which is contrary to what the Nifty and the Sensex did. The index also declined in 3 out of the 4 trading sessions of the week as well. But what we are seeing, sir, this morning, a lot of brokerage houses are continuing to maintain an overweight and a buy stance on most of these NBFC names, which might get more affected than the pure play, banking names as well. For instance, Morgan Stanley has come out with a report which has maintained an overweight rating on SBI cards, target price of 950. Bajaj Finance, they have an overweight with a target price of 10,300. Bank of America also has a buy rating on Bajaj Finance with a target price of 88.44. However, your own sense of how should be one really looking at these NBFC names which may get perhaps more impacted now?
See, it's a very important point. I think the banks which are well capitalized, the banks which have got the ability to raise money, they are not likely to get affected beyond some 10-15 basis points as far as I think their operations are concerned. So that includes NBFCs like Bajaj Finance and among others. I feel that I think they do not get affected more largely because of the fact that on the other side, the consumer is spending money. And as long as the consumer is spending money, and as long as I think the banks are having sufficient amount of capital in the books, I don't think that I think there is going to be a demand shortage for the money that these banks can provide.
Okay.
At the most, I think there might be some amount of pressure on the margin front of, as I explained, 10-15 basis points, but that is more than offset by the kind of a growth that we are seeing, particularly in the case of Bajaj Finance and all, where they continue to grow the book, AUM book, I think in excess of 30%. And that is what is more important because the way in which the consumer demand is picking up, the way in which Bajaj Finance kind of NBFC has integrated themselves with the consumer consumption points, be it on the online, be it on the stores. I think they have integrated very well themselves. So in my viewpoint, any kind of softness in the stock prices because of this regulation, this could be a buying opportunity at the lower levels into likes of Bajaj Finance, where I think one remains fundamentally very bullish about the prospects going forward.
Okay. I wanted to discuss a little bit on the global macros as well. Global markets on Friday, especially US indices, they ended flat but with a positive bias. This will also be the truncated week on Wall Street due to Thanksgiving. We did see S&P 500 saw third straight weekly gain as well. It also turned out to be the first 3-week winning streak for both the Dow and S&P 500 since July, the first one for Nasdaq since the month of June as well. How are you looking at the global macros shaping up, and how would they now end up supporting the Indian markets?
So one of the very important point that over in US Fed, I think has probably indicated that they are probably done with the rate hike cycle. And at the same time, crude oil remaining relatively lower and the inflation remain under control. In my understanding, somewhere from the first quarter of next calendar year, you should be seeing a gradual fall into the interest rates. And generally seen that I think when the fall takes place, it takes about 6 to 8 quarters,
Hmm.
by which I think whatever the rise which had happened, I think would probably start coming down. And that's where you can possibly argue for the interest rate to fall over next 6 to 8 quarters, starting calendar year 24 in the first quarter. Now,
Hmm.
given that situation, the money which has otherwise gone into debt would have a tendency to come back into equity. And that's where probably I think the amount of money which otherwise I think would have come into the equity, which did not come due to the situation which I explained. I believe that I think will start coming back into equity, and that is what is more important, because once the global allocation of equity money increases,
Hmm.
emerging markets, included India, is favorable spot. I believe that I think we are in for a good time going forward. At the same time, 2024 May, we are entering into election. Generally seen that 5 to 6 months ahead of election, the investors try and put more money into the market, and that is where the markets may also go up. So this is where again I am seeing an opportunity of attracting new money into the market. So it's a good news for India. On one side, crude oil is down, inflation is down, because of which I think the currency depreciation would remain under control. Interest rate will soon come down. All in all, equations are working positive for India at the macro level as well as I think at the market levels.
Sure. All right, let's look at the pre-opening action in a bit. The Asian markets indicated to a positive start. Even the Gift Nifty marginal positive at 19,800 odd levels. But the opening tick on the pre-open level is suggesting a 70 point of a dip on the Nifty, 19,655 currently. We will definitely look at a lot of stocks that will be in action in the opening space as well. But a lot of space, of course, stocks from the pharma space will also be in focus today. You know, stocks like Oro Pharma and Lupin, they have got the US FDA approval for new drug applications, and perhaps, zero observations for some units as well. I'm also watching for some of the other pharma stocks like Cipla, who may be at the wrong end of the markets today, especially with the news coming in on getting US FDA warning for the Indore plant as well. So look at the pharma stocks. They made a comeback over the last week as well. So those will be some stocks that will be in focus, apart from the banking and the FMCG, the non-banking finance names that we will be tracking through this entire, trading session as well. Mr. Choksi, I also wanted to understand from you on the FII flows as well. After sustained selling in the last 2.5 months, we did see slight uptick from the FIIs. They bought worth about 1,400 odd crore rupees thus far in November, mainly due to the decline in the US Treasury bond yields and the crude oil prices, like you just pointed out as well. Your own sense of how the flows will round pan out. You've pointed out along a lot of macros as well, with the kind of interest rate hike cycle coming to a fag end. And of course, there will be general elections in the US markets as well in the next year. How would you expect the flows to really pan out over the next 6-8 months, sir?
Generally seen that important events like election would end up attracting a lot of money into the economy, because there is a expectation that I think continuity of the current government is definitely given. Given the situation, I think you are going to attract money. Other equations, as I explained, I think because the bond yield has started coming down, uh, due to which the money will shift to equity, and that is where emerging market equity like India is in favorable spot. Now, given all the equations, including lower crude oil prices, lower possibility of interest rate, and the lower inflation continuing, I would expect that the money will come at a sustained flow. And year after year, one has seen that the increase in incremental amount in the economy from the FI and the FPI is, I think, always on a higher side. In a situation where government is spending big time onto infrastructure building of the country and various industry-related programs, in my understanding, I think the amount of money flow that will get into the Indian markets as well as in the economy for projects will be far more higher in next 3 years than what one has experienced in last 2 years. So certainly, I think one is definitely remaining more confident. Difficult to quantify the amount because I think the traders do leverage money, and if the leverage cost comes down, then I think they accelerate the leverage in the particularly FPI traders. So that is where probably I think I'm not putting the number across, but I do believe that I think we'll be significantly crossing the number than what we have seen in the last couple of years, as far as the possibility of higher allocation to India is concerned in 24 calendar year.
Okay. Mr. Choksi, another interesting aspect will be to watch out for the primary market action this entire week. About 7,000 odd crore rupees worth of funds will be up for grabs. 5 to 6 companies opening their IPOs for subscription. The most talked about, of course, Tata Technologies will be the most anticipated one as well. The first one from the Tata stable to go public after nearly 20 years. Then Indian Renewable Energy Development Agency will be also interesting as the first government offering since LIC will also come up for grabs as well. Gandhar Oil, Flair Writing, Fed Bank Financial Services. How would you be looking at this entire basket of IPOs? Does any company really look attractive to you? Should one be really going for any of these IPOs?
Yes, I think the Tata technology definitely, I think, is taking away all the attentions in the market, largely because of the fact that I think this company possibly couldn't have timed its entry into the market better than what it is currently doing. On one side, we are seeing a transition happening in the automobile industry, wherein the ICE engines are being now systematically getting replaced with the electric vehicles. Given the transition and given the need for the newer design of vehicles coming up, I think companies like Tata Technology, which has predominantly played into this particular engineering R&D space, and particularly into auto space, I think are likely to be, I think, a player which we are likely to assume higher amount of growth going forward. Along with their focus on aviation business as well as I think on the healthcare, each of these verticals on which I think this company is focusing on their engineering R&D activities, I believe that I think they have relatively much stable growth to talk about. I would not be very gung-ho about, I think, putting the numbers, but the fact remains that I think around 20% kind of a CAGR growth over next 3 to 5 years is distinctly possible in the business for Tata Technologies. And that is where I think you might see a forward discounting in excess of 30 times price to earning ratio will be the order of the listed entity going forward. So we believe that there is an opportunity into this particular stock from fundamental merits point of view, as well as from the point of view of investors asking for more such kind of papers to add into their portfolios.
Fair enough, sir. Let me also welcome our other guest, sir. You stay on with us. Akshay Bhagwat joins in now. He's the Senior Vice President, Derivatives Research at JM Financial Services. Welcome, Akshay. Good morning to you. Thanks a lot for taking the time out. Let me quickly straight away get on to the two stocks that you would advise for an intraday session today.
Good morning, Sakshi. Thanks for the invite on the show. The two stocks which I have for today's trade, one is Marico Limited. So Marico Limited has seen a strong positive uptick on the prior trading session backed by long additions in the derivative segment. And also we have seen strong buying from the support base. So I believe this stock is setting up well for an up move from the current level. So you can buy Marico at current level for a target of around 545 to 550 with a stop loss below 515. That's my first trade. And the second trade I would like to recommend here is Coal India, which had a fab run till now, and the last 3 days is giving us another opportunity to re-enter long positions from a trading perspective. 348 is where it closed on Friday, and we believe renewed interest in buying action can see the prior highs of 355 been taken out. So buy Coal India for a target of around 365 to 370. Your stop loss will be below 332.
All right. In the pre-opening action, we are actually looking at Coal India open as one of the top gainers as well. So we'll keep an eye out on that stock too. Apart from this, we're also looking at stocks like Tata Motors, Bajaj Auto come up in trade as far as the early pre-opening action is concerned. On the Nifty, you're seeing 19,731 and thereabouts kind of levels coming in. When we talk about the sectors, I think barring the financial services and the private banks, rest of the sectors are actually doing pretty okay. Realty stocks come up higher in trade, apart from the broader markets, the small caps and the mid cap index as well. These are the top movers in trade. So the realty space is up by 0.4% odd in trade right now. The small caps follow next and the mid caps as well. Apart from this, we are actually looking at PSU banks that have recovered about 0.25% higher in trade. Metals, FMCG, oil and gas, these are the sectors that are moving up in trade right now as we speak as well. some of the stocks from the Nifty 500 basket that are already moving up, are stocks from the hospitality space as well. So stocks like EIH Limited, for example, that's moving up higher. You have ITI, Power Industries, Jamna Auto. These are the stocks that are moving up about 1.5-2% higher in trade in the early opening action as well. All right, Devin. Just one question that I want to ask you before we let you go. Any particular themes that you now believe that will continue to, outperform the markets now over the next 6 to 8 months, because of a lot of political, standpoint will be definitely overweighing on the markets. We have the state elections, the general elections as well. So how should one be really navigating in terms of the key sectors one should keep an eye out on?
To keep a clear focus on IT. I think IT has underperformed in past 1.5 2 years, and I clearly see the possibility of IT start performing better because of the higher allocation of funds coming in from the customers who refrain from placing orders in the global markets. Given the situation of higher amount of demand for the computing, I would think that IT as a sector would start assuming the larger flow of contracts which they have till now been deprived of. And given that kind of a position that where the investors or the traders have not increased their exposure into IT space, probably next 6 to 8 months could surprise the market with higher
Okay.
amount of allocation to IT as a sector and more amount of trading upside into the IT stocks in particular. So one can keep an eye on this particular beaten down sector, which remains relatively more favorite at this point of time. Also due to the fact that I think fundamentals are supporting this company and the prospects are definitely, I think, improving for them going forward.
So would you still weigh on the large cap IT names which have rather been underperformers vis-a-vis the mid cap IT names, or would you have a mix of both? What would you recommend?
So if large cap IT companies are promising to produce 15 to 20% kind of a return from current price level in next 1 year time, the mid cap to small cap IT companies selectively might end up giving you at least better return by around 20 to 25% in the coming period. So I think one can make a mix of the portfolio between the large cap and mid cap, given the fact that we are also heading the election. So you might possibly, I think, create the balanced portfolio in such situation.
Fair enough. Well, many thanks, Mr. Choksi, for being with us on the show and sharing all these
Thank you.
wonderful insights, as always, with all our viewers. Great to have you with us on Business Today Television. Let's continue our conversation with Akshay Bhagwat, who is with us. He's already talked about two intraday picks that he suggested. One is from the FMCG basket, that's Marico, and the second one is Coal India. We're already seeing an uptick in both these spaces already in the pre-opening action as well. As we inch closer to the market opening, you can see 19,731 as settled trade in the pre-opening space as far as the Nifty is concerned. But we'll come back to the stocks when the markets open as well. Akshay, also I wanted to ask you on some of the names that are on the stocks to watch list, and what does one really need to do here. From the pharma pack first, I wanted to draw your attention to stocks like Oro Pharma and Lupin. Considerable positive news flow coming in from US FDA here. Is there a trade that you'd like to take in either of these names here from the pharma space, Oro Pharma and Lupin?
Firstly on the Oro Pharma. Well, Oro Pharma has seen a strong uptick in the last couple of weeks, right from the 880 odd levels. We are almost near the June 2021 highs, which we saw around 1000 odd levels. So we are nearing a psychological resistance area of 1000 to 1020, which is slightly vulnerable to short-term profit booking. So you might expect some temporary stopover in Aurobindo Pharma at the given level. But considering Lupin, there seems to be more upside from the given levels. If you look at the uptrend which Lupin is, where higher tops and higher bottoms are clearly visible on the charts, indicating a strong chart structure. It closed at 1196, minor resistance at 1200 in terms of call writing, but I believe this should be taken out, and we should be heading for targets of 1230 to 1240 from a trading front on the upside. So Lupin would be my preferred pick, given the kind of fact that Oro Pharma is trading near its resistance point.
Okay, we'll take two pharma names more. One is Mankind Pharma. The company has got added to the FTSE All World and All Cap indices as well. How would you be looking at Mankind Pharma? I know that historically you don't have too long charts because the stock was recently listed, but the stock has definitely gained a very, very strong momentum after listing as well and has given substantial returns to investors. How do you think this new trigger could be looking like on charts now?
Well, Mankind Pharma is nearing its key trading resistance, which we saw somewhere in the month of July 2023. The resistance area is 1945.
Okay.
Now, I believe today it's a positive uptick, and we would open at the resistance area. So, if you're trading on this stock for day trading, it's a slight caution because we are dealing with a resistance area where you might see some stopover. But the broader charts or the medium charts are very strong, and they are pointing for targets of 2100. So, I would believe that you should be invested, or you should slightly consider this stock from a medium term perspective with a 1 to 1.5 time horizon. I am seeing targets, as I mentioned, of 2100 plus. Your supports are roughly around 1800. So buy Mankind Pharma or consider holding it, targets 2100 with a stock below 1800.
Fair enough. And what would you say on Cipla then? Because this is stock that is got some negative news flow over here, and it has got a warning from the US FDA for its Indore unit. How would you look at this stock?
Even Cipla is trading at its slight resistance area. If you look at the month of August 23, there is a slight congestion on charts, which is pretty evident once it nears the 1260, 1270 area. But time and again, I'm noting profit booking in this stock. We tested these levels a couple of trading sessions back. So you might see a slight knee-jerk reaction on the downside, given the fact that even I believe the negative news is also there, as you mentioned just now. So a slight downtick is possible, but that does not weaken the broader chart structure. Temporary downsides till 1200, 1210 cannot be ruled out. I believe those would be re-entry points for you. So the broader chart structure is strong. It is just maybe on the day trading front that you might have some negative uptick on negative trading on Cipla.
Okay, let's look at the market opening now. The markets have opened slightly muted note again. 19,729 is what you see on the Nifty absolute flat in trade. Nifty Bank is down 0.3% odd at 43,461 odd levels as well. Of course, you do see financials, banks as the key laggards today. The private banking index is the top losing index sectorally, 0.3% down in trade. The Nifty Bank is down by 0.3% too. Financial services also down by 0.3%. So all these three are the major laggards. They continue from the weaker sentiment that flowed in on Friday as well. You also have consumer durables names now coming under pressure, oil and gas, PSU banks, all of them under pressure as well. The auto slightly softish in trade as well. What's doing well in a trade today is realty space and the metal pack as well. The realty space continues to move up higher by 0.5%. Metals follows suit, again 0.5, 0.6% of a move there. IT stocks doing well, rather 0.4% of an uptick for this one. The healthcare stocks also, which we were discussing, again some of them are up in trade, 0.3% odd in trade. You can look at both the broader markets, the small caps and the mid caps that are doing better in trade as well. So about 0.5% increase for the small cap 100 index, about 0.2% of an uptick coming in from the mid cap 100 index basket as well. The PSU banks are now coming up in trade, some green tick being seen there. On the Nifty, which are the top gainers right now? You have Hindalco as one of the top movers in trade. Apollo Hospitals, HCL Technologies, NTPC, Divis Labs, Tata Motors, Hero Motocorp coming up in trade as well. So slight auto, slight metals pack and the IT names, power names that are picking up momentum in trade as well. From the Nifty 500 basket, again, like I pointed out before the markets hit pre-open, also that EIH, is up by about 4 odd percent. CAMS is up in trade, 3% higher. You have railway names coming up again. So you have both Ircon International and IRFC as the names that are moving up in trades. We will get expert views on this too. Bombay Stock Exchange continues to move up higher, 2% higher in trade as well. You have Nykaa that after a substantial move on Friday moves up 2.5% uptick in trade. You also have Dixon Technologies, Cyient from the IT basket that are all up in trade. Hindalco, Bikaji Foods also moving up in trade as well. As far as the F&O space is concerned, you have Oberoi Realty, NMDC, Apollo Hospitals as the top movers as far as the FNO space is concerned. On the downside, however, it's Manappuram Finance, ICICI Lombard, Asian Paints, Axis Bank as some of the top laggards in the FNO action as well. Akshay, your own thoughts on the market opening and any particular trades you've spotted in the early action?
Well, on the market opening now, one thing we need to see that is the Nifty has been trading since the last trading, that's on Friday, at a key resistance of 19,850 odd levels. So for the momentum to regain in the broader market, these levels has to be surpassed. That's 19,850. I believe this is a temporary stopover resistance for Nifty. It might consolidate for the next 2-3 days, maybe in this resistance area. But the belief is that this should soon be taken off and we should be going for 20,000 plus. As far as the opening trades go, I think Dixon Technologies and Tata Motors, these two stocks look good from the way the start has been. The IT space has been buzzing since last week, and Dixon Technology too has seen a strong pickup in buying along with additions in deep OTM calls in the derivative segment, which makes me believe that the stock has higher targets to go till maybe 5,700 or 5,750 as I see it on the charts. And Tata Motors has too seen a strong uptick. It's backed by long additions, and 700 plus is where the stock should be going for. An excellent long-term chart setup. The momentum is pretty strong. Auto space has been buzzing, so Tata Motors can be considered should be on your buy list in the auto space. And as I mentioned, Dixon Technologies from the IT space. These are the two names I have from a short-term trading perspective.
Okay, short-term trading perspective, looking at the current stock market opening, Dixon Technologies and Tata Motors, the two picks that Akshay has just suggested to us before the markets had hit open. There was two stock picks that he had already shared for an intraday level, Marico and Coal India. Marico slightly lower in trade, but Coal India is already picking up higher, 0.9% up in trade right now at 348. Would you want to revisit any of the targets here, Akshay, after the market open?
No, Sakshi, both the targets are intact. Both the chart
Okay.
structure are exceptionally strong from a trading perspective. I believe Marico is open flat, but it's giving an opportunity to re-enter. It should soon see a pickup in momentum as we go into the day.
Okay, fair enough. Let's now look at the top buzzers in the markets, and I'll take your view on that as well. The top moving stock on the Nifty is Apollo Hospitals. How would you look at this stock at 55.62? Is there a trade here?
Well, the healthcare space has has had a fab bull run in the last few trading sessions, and if you look at especially Apollo Hospitals, a very strong breakout was noted at the levels of 5,400 on the daily chart frame. That gives us a strong target of around 5,750 on a trading perspective. The highs, the swing highs, which we saw somewhere in the way back December 21 was around 5,900. So your positional targets can be around 5,900. So I would say Apollo tires should be on your buy watch list as far as trading momentum chasing is concerned. 5,900 is the broader targets. Trading targets would be 5,750, but it's definitely a buy for me.
Okay, let's talk about the realty space now. The top mover on the FNO space is Oberoi Realty. That's moving up 3% higher in trade. In the FNO basket at least, it's now at 1385 odd levels here. Sharp open interest of 9,800, volumes also about 700 odd. Your own sense of Oberoi Realty, would you take a bet here after the initial momentum at 1373 odd in the cash market and 1385 in the FNO space?
Well, even the reality space has been buzzing for the November series. If you look at Uberoi Reality, the last four trading sessions has seen a strong gain from 1,250 to 1,375 as it stands. Charts are suggesting that it's overbought at this point of time. So I'm not ignoring the fact that the momentum can take it till 1,400, but a fresh long entry at the current juncture does not justify the risk reward payoff. So I would just stay away if you are taking a fresh buy trade at the given point. If you are holding, yes, raise your stop losses to around 1340. Around 1,400, I see some bit of profit taking in this stock.
Okay, let's talk about the railway space, Akshay. Do you spot any names that you would want to recommend here? Both Ircon International, IRFC, they're moving up in trade. Even on Friday, we had seen a slew of names really up in trade as far as the railways action is concerned. They're coming back after a break as well. Any particular trade that you would like to recommend here from the railways pack?
Well, from the railways pack, Indian Railway Finance Corporation, that's IRFC, has a very strong chart structure. It's trading above its 50-day moving average, which means the momentum is picking up back in the railway stock. The broader chart structure is possibly hinting at a basing formation around the levels of 70 to 73. I believe that the stock should again head for the levels of 90, which we saw somewhere in the month of September. So keep a positional target in IRFC, because at the given juncture, intraday or short-term trading might not fit well. 90 is on, 90 target is on in IRFC. Go for bigger targets. Keep a stop loss below 70, and 90 is where I see IRFC with a time frame of 1 to 1.5 months.
Okay, one and a half months, 90 kind of targets can be seen on IRFC, currently around 77.65 odd levels. The railway space clearly buzzing. Apart from the realty space, healthcare space that we've discussed, let's also discuss the metals pack that's moving up in trade, especially in the F&O space. We're seeing stocks like SAIL, Steel Authority, that's moving up in trade. And I'm also looking at NMDC from the mining pack, that's also picked up in trade as well. 3% higher. Odd or so right now, 1.5% higher in trade right now as far as the F&O space is concerned. NMDC Steel Authority, which one would you go for in case we have to take a F&O pick?
Well, if you were to take an F&O pick, I would prefer NMDC as it stands currently. 172 roughly is where it trades. The chart structure is very healthy. A higher top, a higher bottom formation, trading above the short-term moving averages. All the signals are that the stock should be heading for targets of 180 to 183 for short-term. So out of the two stocks, that SAIL and NMDC, the chart structure of NMDC is definitely stronger, and this would be the name to buy in case you have to compare out of them.
Okay. We were discussing the hospital names like Apollo Hospitals, but even the second rung names, the diagnostic names, they are doing well today. You're looking at Divis Laboratories now topping the charts as far as the Nifty is concerned. It's trading at 3649 odd levels. Then you also have, stocks like Laurus Labs moving up in trade as well. Your own sense, and Dr. Lal Path Labs again moving from the Nifty 500 basket too. Any sense what's happening here in the diagnostic space again, and do you think this is becoming more attractive zone now?
Yeah, definitely. If one has to take a bet between pharma and the diagnostics
Yeah.
space at the given point of time, it has to be the diagnostic space, because there are stocks which are on the verge of strong breakouts, especially if you look at the point where Lalpath Labs is placed. It's trading at 2760. It's a possible double bottom in the making and is trading near a key resistance zone. So the break of 2760 should set a strong momentum uptick, which can see a positional upside target till 3250. So Lalpath Labs is setting up for a breakout. Metropolis has already seen a breakout a few trading session back. So that is a very strong buy structure for targets of 1790. Apollo Hospital is something we spoke about. And Ipca Labs is one more stock which is also showing a strong chart structure. So yes, definitely diagnostic space is the space if you want to have a kind of a defensive bet and want to prefer something over the pharma names, then diagnostic is definitely the space you should be keeping an eye on.
Okay, great. Let's revisit the markets right now. The Nifty is as flat can be, 19,728 to 729. It's not moving at all, but we're seeing recovery below the surface. So, now you're looking at private banks also inch up higher in the green. You have PSU banks that inched up higher into the green. Right now moving 0.7% up into the trade as well. The private bank still about 0.25% lower. The Nifty bank therefore is slightly down in trade on the back of losses being seen on the financial financial services and the private banks, but the PSU banks have seen some recovery come in. What we are also seeing is that the realty space, healthcare, PSU banks, IT, these are the top four moving parts as far as the sectors are concerned in trade right now, apart from the broader markets. So slight volatility also being seen in the market, so we should definitely keep that into account as well. From the auto basket, you talked about Tata Motors as one of your pick on an intraday level as well. But I'd also like you to talk about the two-wheeler names. Some of them are moving up in trade. Talk about Hero Moto, Eicher Motors, and Eicher Motors has had a stunning move in the previous week as well. Your own sense of which is the best fit two-wheeler stock that one should be going for in case somebody has a short to medium kind of a time frame.
On the medium-term charts, the name definitely has to be Hero MotoCorp. The reason being that we had a very long consolidation phase in Hero MotoCorp, right from, you can say, July 23 to the last few trading sessions. And we have seen a very strong positive breakout in Hero MotoCorp a couple of trading sessions back. This breakout came at 3260. So that's a very positive development on the charts, which is setting up a target of around 3630. These levels were seen way back in March 2021. So I believe these are the targets from a medium term perspective if you are looking at Hero MotoCorp. So definitely Hero MotoCorp has to be a buy at the current levels. You can even add on dips in case it does offer a chance. 3200 is a strong support, and as I mentioned, the targets one should be gunning for is roughly around 3600.
Fair enough, Akshay. Let's also talk about one or two stocks from the Nifty 500 basket, and I wanted to draw your attention to Nykaa. Again, a stock that does not have a too long a historical chart for you, but the stock has been, moving substantially in the last few trading sessions. 172 odd or so, 3% higher in trade after the 8.5% move that came in the previous session as well. Your own thoughts on Nykaa? How should one be looking at this move? Is this a move that one should chase or stay away even now?
Yeah, definitely from a trading perspective, it's a
Yeah.
move to be chased. The reason being that, the stock as actually has bottomed at 120.25 odd levels, and this bottoming out has taken a real long time. That's almost around 3 to 4 months is what I see on the charts where this bottoming out phase has been seen. And a very strong breakout came in the prior trading session on Friday at the levels of 160. So the momentum has kicked in. The buying interest is positive. The delivery action, as I see in Nykaa, is picking up. So from a trading or a short, maybe from a 15 odd day trading perspective, this stock is setting up for targets of 190 to 195. Now you might get a re-entry at 165, 170. That's what my belief is in the short term. So again, buy it in case you get there. Even at the current rate, do not hesitate. You can buy at the current rates. Targets, as I mentioned, 190 plus. The stop loss should be below 150. And Nykaa is a strong pick considering the chart parameters it's trading in currently.
Okay, stock to be changed as far as the trading is concerned, or for trading for sure. Thanks a lot, Akshay, for being with us on the show and discussing all these stock ideas with all our viewers as well. Great to have you with us on Business Today Television as always right now. Markets at 19,708, slightly lower than the opening, 22 points lower as far as the Nifty is concerned. What is the big problem here? Again, it's the private banks, financial services that continue to reel under the pressure of the RBI's new norms as far as setting aside more capital is concerned for the unsecured loans like personal loans and credit cards is concerned. So sentimental, definitely it has been a big knee-jerk reaction that we've seen for 2 consecutive days now as far as the banking names are concerned. But what is doing well today is the realty space. The PSU banks have clearly recovered in trade. IT stocks are coming up in trade, 0.5% higher. Healthcare, small caps, mid caps, these are the names that are moving up in trade right now. And time to shift gears now and understand more about the corporate radar section. The company on our focus list today is Gandhar Oil Refinery. The IPO for this company is set to open on November 22nd. Remember, the company plans to raise 500 odd crore rupees through a fresh issue of 1.78 crore shares and an offer for sale of 1.17 crore shares as well. And Of course, apart from this, as far as the investors are concerned, it is important for them to note that the objectives of the company would be to use the part of the net fresh issue for the working capital requirements of the company amounting to 185 crore rupees, the debt of 22.7 odd crore rupees, and of course for the purchase of equipment and civil work about 27-28 odd crore rupees as well. For investors, about 88 equity shares can be bid for as a minimum lot right here. And of course, the company has already set the price band for this stock as well. And we do see that the company's management now joins in to give us more details about this IPO as well. Sameer Parekh now joins in. He's the Vice Chairman and Joint Managing Director, Gandhar Oil Refinery. All right. Sir, welcome to the show and thank you so much for taking the time out. Your own sense of the company's plans as far as the vision for the company is concerned after you launch this IPO. If you could give us that, a little bit backgrounder on the kind of business model you have, the key verticals that you work in, and how do you earn revenues as well. That will give us a better clarity. All right, I think we have Ashlesh Parekh, Joint Managing Director, and not Sameer Parekh. Welcome to Business Today TV. So give us a sense of, your own company's plans of this IPO and what do you aim to do?
Yes, Sakshi, very good morning to all our viewers. Gandhar Oil Refinery India Limited. We are the largest manufacturers of white oil and one of the top 5 players globally. So the revenues of our companies are divided into 3 broad categories. The personal care, healthcare, and performance oil division, which contributes to 55% of the total revenue of the company. The lubricants division, which comprises of the industrial lubricants and the automotive lubricants, contributing to around 25% of the revenue of the company. And the process and the insulating oil division, which contributes to around 9 to 10% of the total revenue of the company. So we are, doing a fundraising of around 302 crores of fresh equity share, where we are planning to do capacity expansion in our facility. There is some term debt repayment which we plan to do, and balance would be used for working capital and GCP expenses. We are quite strong in the white oil space. The industry is itself expected to grow at a 10% CAGR in next 5 years. Having 3 manufacturing facilities, 2 in India, 1 in Dubai, we plan to do capacity expansion, with the process of the issue, and also some capacity expansion, which is expected to complete by end of this year through internal accruals as well.
Okay. Sir, also wanted to understand, who will you be competing with in the listed sphere and what is your current market share and how do you plan to gain market share going forward from here?
So if you see, there is exactly not a like listed peers. Although if we would like to, if you ask me on a list on the peer basis, so there are companies like Savita Oil or an APAR industry. But if you see, APAR is more prominent into the transformer oil space. We at Gandhar are more focused on the white oil and the personal care healthcare division. Where we would like to increase our revenue, increase our customer base as well. It is kind of an quasi FMCG company, what I would a proxy FMCG company, where we would like to showcase our company vis-a-vis the market.
Right.
And the market share that we have in the
please go ahead.
And the market share that we hold in white oil today, being the largest manufacturers, is around 25% of the total market share in India and around 9 to 9.5% globally. So we are one of the top 5 players globally and the largest in India.
Right. Also, sir, I wanted to understand, since, you talked about the product categories that you have and the kind of exposure you have to the consumer healthcare sector as well. What is the demand on ground currently that you are seeing here? And of course, what is the trajectory going forward from here, from this key segment of yours?
See, if you see, FMCG industry is growing at 6.5%, year on year. But we are not only confined to India, we are confined to global as well. Our 40% of our total revenue is generated from overseas sale. So we export to the US, Europe, Africa, Australia, Asia Pacific, across the globe. So the growth target at Gandhar is not only confined to grow the FMCG growth in India, but it is also expanding across geographies globally, and also expanding within the customers, which are our multinational global companies.
Okay, fair enough. Tell us, what is the revenue contribution between your domestic and international operations, and going forward, do you plan to scale up your international operations?
So for as of FY23, our total revenue was 4080 crores, out of which around 40% of the total revenue was generated from overseas sale business. And we would like to expand our revenue base in terms of the personal care healthcare category. And we have leading Indian and multinational FMCG companies like Unilever, Procter and Gamble as our valued customers.
Okay, do you plan to add any more clients to the esteemed list now? What is the plan
Yes,
of action there?
yes, absolutely. It's our endeavor, to add new customers year on year. There are other global multinational companies which still are not on board with Gandhar. Obviously, work is under pipeline with a few of these companies. But today, we are present in lots of Indian FMCG companies, including Patanjali, Bajaj, Imami, Dabur, Marico. The list is, like more than 3,500 customers, and we have the leading Indian and multinational customers on our board today.
Okay. Also, on the margins front, could you tell us, how have your margins panned out for the entire, say, FY23 up until the second half of the FY24? And what is the outlook going forward? What is a sustainable band in which you actually want to see your margins grow in?
See, our revenue as of FY23 was 4080 crores. Our EBITDA was 316 crores, which is around 7.8%. And profit was 213 crores, which is around 5.2% of the total revenue of the company. As of FY24 quarter one, the revenue was 1071 crores. The EBITDA was 84 crores, and profit after tax was around 54.2 crores.
Okay, fair enough.
And
Yeah, please go in.
yeah, we anticipate, to obviously work on a pretty much fixed gross margins per kiloliter. This is where we endeavor, to work with our customers, to ensure the margins of the companies are maintained with the quality of customers that we have.
Right.
And also to add, the suppliers, we have a strategic tie-up for our uninterrupted supply of raw materials as well, for timely delivery, short supplies, and also transparency in pricing, even with our suppliers.
Okay. Sir, could you also help us really understand as far as your usage of the funds raised is concerned? I did mention about what you've already mentioned in the DRHP, the split between the fresh issue raised. How will you be planning to raise it? About 23 odd crore rupees will be spent to reduce the debt. What will be your debt on the books after this repayment? And going forward from here, what is your debt picture going to look like?
See, we hardly have any long-term debts of around 27 to 30 crores is the long-term debt that we have, which we plan to repay with the proceeds of this issue. Apart from that, as mentioned in the DRHP, we are planning to use it for the working capital and capacity expansion. Successful listing of the IPO, the debt, long-term debt, the only debt we'll be having is the working capital debt, which will be less than 200 crores.
Okay, fair enough. Now, sir, could you help us understand going forward from here, what is your outlook on both the top line and on the operational profits is going to be concerned? I mean, do you have your internal targets as well going forward from here? Say maybe in the next 1 or 2 years or so, if you could give us that visibility.
Traditionally, even if you go back to the historical numbers or revenues of Gandhar, we have delivered impressive double-digit volume growth, not only in terms of the revenue but also in terms of the volume. It is because of the quality of customers that we have, the geographies that we are present. Obviously, the endeavor or the internal growth target with the marketing team, within the management, within our facilities, we would like to maintain and sustain the growth. So for that, the strategies of the company are very clear in terms of, focusing with the existing customers, grow with the existing customers, and expand across geographies, with these customers, and also onboard new customers.
Fair enough. Well, many thanks, sir, then for joining
As
us on this
you are,
special.
yeah,
Yeah. Please go ahead.
yeah, sorry, yeah. As you are well aware, we have leading Indian and multinational customers, so with the growth of the existing customers and also growth with the new customers, that is where
Right. Well, many thanks then, sir, for taking the time out and explaining to all our viewers about your business and the outlook going forward, the growth trajectory that you plan. All the very best to you for this IPO. And here's hoping for more conversations to follow once you get listed on the stock exchanges as well. Great to speak with you and understand more about your business. Let's get back to the markets as well to see how the market's really trading at. Of course, the primary markets will be in focus throughout this entire week. 7,500 odd crore rupees will be raised via IPOs. So, definite action needs to be, and of course, focus needs to be kept as far as the primary space is also concerned. Like I pointed out, from the markets perspective, 19,715 currently on the Nifty, 15 points lower. So, the Nifty is really not doing anything as far as the benchmarks are concerned. Broader markets still better off, which can actually throw you some opportunities of gains coming in. But again, now it's the IT pack that's moved up higher at the top spot, a percent higher for the Nifty IT space. That's now moving the markets higher in trade. From the top Nifty stocks, it's HCL Technologies and Tech Mahindra that are the top movers as far as the IT space is concerned on the Nifty. You also have Wipro and Infosys now climbing higher in trade. The IT pack, which Devin also mentioned, that over the next 6 to 8 months, this sector that had been larger underperformers of the previous somewhat could be back in focus, and the IT space is something that you need to keep in mind in case you've been looking at building positions on a sectoral basis as well. Even in the mid-cap IT basket, which had been larger outperformers, you actually see from the Nifty 500 basket stocks like Cyient moving 5% higher in trade even today. Then you also have stocks like Coforge back in action, about 2% higher in trade as well. You also have Dixon Technologies, one of the stocks that was talked about by Akshay Bhagwat as one of his top picks again. Here he sees 5,700 kind of targets coming in the medium term perspective as well. So and Birla Soft also comes up higher, 1.5% up for this one too. A lot of these IT names are coming back in flavor, so keep in mind all of this space as well. The realty space follows next. Oberoi Realty, the top mover as far as the F&O action is concerned. You also have PSU banks now moving up in trade. A lot of stocks from this basket had been larger outperformers when we talk about that move we had been seeing in the previous leg of the move in the PSU banks. But even today, you have Punjab National Bank, Union Bank of India, then you have Canara Bank, Central Bank of India. All of these stocks really moving up in trade as well. So the flavor of the day is largely IT, realty. Then you also have some healthcare stocks in focus, like the diagnostic names as well. So these are the top moving parts as far as the early action on the markets is concerned. Well, we'll wrap it up at that. Many thanks for joining us on this special edition. But do stay tuned onto Business Today Television to catch all the updates from the world of business and stock markets going forward from here too. Are you looking to invest in IPOs? Well, there's good news for you, as 5 IPOs are lined up to hit the D street starting next week. That's November 20th. Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra, and in this video, I'm going to be telling you which are the 5